Welcome to the System Simplified podcast, where we feature top leaders who share stories on how to successfully systemize a business. Now, let's get started with the show.
Hello, Adi Klevit here, the host of the System Simplified podcast, where I feature top founders, entrepreneurs, and thought leaders about systematizing a business. And today's episode is being brought to you by Business Success Consulting Group, where we create, document, optimize, and implement processes and procedures so businesses can grow and thrive. And today's guest is Peter Goldstein. Hi, Peter.
Hi, Adi. Great to see you, and thanks for having me.
Yeah, you're very welcome. Peter, we're going to have an exciting conversation today, a conversation that will answer questions that I know many entrepreneurs have. And we're going to talk about, I'm going to read your bio first, and then I'm going to leave it as a mystery because we're going to start our conversation. So, Peter, you are a seasoned entrepreneur and a capital markets expert with nearly 40 years of international business experience. And to prove that, you are right now in Malaysia, actually. So you definitely have that experience of international business. You are the founder of Exchange Listing and EMIs Capital and has led numerous IPOs, M&As, and equity financing. So that's going to be the topic. And you're also the author of two books, The Entrepreneur's IPO and the newly released The Investor's IPO. So we have the Entrepreneur's IPO and the Investor's IPO. And you are a regular contributor to Forbes, Nasdaq, and Entrepreneur.com. Pretty impressive. So tell us a little bit about yourself and how did you get started as an entrepreneur? Tell us a little bit of your history, the career, and how did you get to where you are at right now?
Well, thanks for the generous introduction. And it's being an entrepreneur is quite a journey. I'm proud to say I'm approaching 40 years. I started my first company in my 20s in New York City in the food industry. And I was starting a career in food and beverage management. And I had always wanted to be an entrepreneur. That was, ever since I was a young kid. I didn't know what business I would be in. And through, opportunity set in my early 20s, I started a specialty food distribution company in New York City and in Manhattan based, and grew that over the course of 6 years, distributing products to the better hotels and restaurants, and then became a wholesale producer, distributor in both Los Angeles and New York, and ultimately had my first exit at 30. And that's where I really learned about the ability to build a company through the pathway of scaling and an exit. That exit was in the private markets. It was a strategic buyer, a larger industry player that wanted to basically bring about, through the acquisition of my firm, distribution and growth inside of a complementary area of business, so synergistic buyer. And so ever since then, for the last, now close to 35 years, I've been building companies as either a founder, investor, CEO, or advisor, as well as a board member, with a focus on emerging growth companies. So these are, small to medium-sized companies that are anywhere in the globe that have the characteristics of an emerging growth company, and one that, is near and dear to my heart as an entrepreneur.
Cool, great. So what are emerging businesses or emerging companies?
So in the capital markets, I specialize in what they would call small cap and micro cap companies. And by definition, small cap would be a $300 million market cap to a $1 billion market cap. So that's a pretty wide range. Micro cap would be 50 million to 300 million. And the emerging growth part can be defined really by their growth rate. And that's typically in a 30+% year-over-year annualized growth. So these are companies that are in sectors, geographies, where they have already figured out what I like to call the product market fit, and that there's a strong demand for their product, their service within the market. And then they're experiencing growth that gives them that type of a metric, or quite, significantly higher as they expand and scale their companies.
Got it. So if they're in that stage, what is it that makes them want to sell?
Well, so I work within the IPO side, and there are many different, I would say, exit strategies that entrepreneurs can pursue. And so a sale, as you asked, could be a trade sale, could be merger, could be acquisition. There are many different reasons that would motivate an entrepreneur to want to pursue an exit strategy. One of those is where I focus, which is inside of the capital markets and creating liquidity event through listing your company on either the Nasdaq or the New York Stock Exchange.
Got it. Okay, so before we go into the IPO, because that is your area of expertise and you wrote 2 books about it, I want to go back to your story when you started. Did you know, when you started your first business, did you start with the idea, I'm going to exit in a few years?
I love the question, because I don't think too many young entrepreneurs in their 20s have any plans or thoughts about an exit. I certainly did not when I began my business. I was just happy to be able to build a business, to be able to get clients, to be able to get revenue, to be able to produce profit, and free cash flow. So like many entrepreneurs, I was hyper-focused on growth. I was hyper-focused on being able to build the company without ever really giving much thought to what happens down the road. And so, of course, now it's something that I really work with. I mentor and coach a lot of CEOs. A lot of them are younger, in understanding the value of what I would call an exit strategy mindset.
Yeah, absolutely. What is an exit what is an exit mindset?
So an exit mindset is really about operating your company as if you were preparing for an exit. And this is right up your alley, because it includes, of course, having systems and controls, which is, part of running any good business. But when you're looking at an exit with an exit mindset, everything that you're doing shifts based upon the perspective of how would what you're creating and building and running and operating be viewed by a potential partner, a potential investor, a potential buyer, and or the regulators that you would go through the process of bringing on a board and going through compliance and through the transparency of a financial audit. And just shifting that mindset can have a great impact on how an entrepreneur focuses on their day-to-day, week-to-week, month-to-month way of approaching and running their business.
That's right. So what are some of those the mindset shifts that an entrepreneur has to have, or it will be beneficial to have, in order to look at, okay, maybe in the future I can exit or prepare for an exit, even if they're not preparing right now, but build it towards the future?
I think it starts first with understanding that, you want to be proactive as opposed to operating reactively. Many entrepreneurs are reactive in nature, and then being strategic, right? Moving from what you might have as a way of ambition more to execution inside of a defined process. And that could be, we'll take a few different areas, but let's just take finance as an example. As if your company was going to be going through a financial audit. So setting up the reporting processes as if you were required to report to third parties and regulators. So meaning every month you're completing your financials, every quarter you would be going through the reporting, the measuring, the metrics, the KPIs of those financials, with the ability to then know that you'd have third parties looking at and reviewing the work that's done. So just that process alone and being ready for that can really shift the way that you're approaching just the financials. And that's, of course, the financials are the easiest way to measure, what you're doing from a financial perspective when you're recording them and giving them a comparison, not only to how you're doing on a month-to-month, quarter-to-quarter, year-to-year basis, but inside of comparing to the peers, right? Other companies in your sector, in your similar size and scope, and having the ability to measure your performance and theirs. So that's just one set of processes that would go in, and then you could break down all the different aspects of systems and controls that would be necessary in order to have good financial reporting.
That's right. Absolutely. So it's putting the house in order, as if though it's kind of like you want to move out of your home, but you keep it and you live in your home, but you do the renovations, you fix whatever needs to be fixed. You live organized and orderly. I mean, that is the way. I mean, I'm giving you that example because I have that analogy, but it's also true for me in terms of like, I want to keep my house as if though I can, if I need to sell it tomorrow, it's in good order, it's in good shape, because the philosophy behind it is that I want to enjoy it, right? I mean, you know that you can have a place where you're living and then you are getting ready to sell. So all of a sudden you're fixing everything that is wrong. You're cleaning it up. You're throwing away everything that you don't need. And then you have like this beautiful house, like you have it in a magazine. So why not live your life like that? The same thing with the business. If you're ready to exit, then you do all those things. Why not do it while you're actually running your business so you can enjoy your business and you can enjoy the freedom that it gives you, because it will allow you to exit whether you are actually selling the business, you are exiting in any other way, but that way you can actually enjoy the business and not being run by your business.
Yeah, it's a great analogy. And I think that companies can kind of quickly be overwhelmed by how fast things are moving in this world, right? So running a business at any level in this kind of current stage in time is complicated. So having those systems in place along with that mindset, and I would say, the three big areas that we tend to focus on: legal, financial, and operational. And having, as you said, then the ability to have all of that in order. So not only can you get the benefit of that, but you can actually get a little more return on all the quality hard work that you're doing, to have some quality time to be able to measure and experience the value of what you're creating.
That's exactly right. So then you actually enjoying it, right? You're doing it, and it creates some sanity. So I agree.
Yes.
Okay, let's talk about IPOs. So define for us IPOs for our listeners, if they probably heard the term, but they want to understand more. And when would it be right for an entrepreneur to pursue that route?
So I've had the benefit of taking my own companies public as a CEO and a founder. And I've been an advisor, an investor, and a board member to countless number of companies now. And one of the things that entrepreneurs don't realize is that you don't have to be a unicorn in order to list your company. So both the Nasdaq and the New York Stock Exchange have lower level tiers that are there created to bring public companies onto the market at an earlier stage. And so this is, again, in this micro cap and small cap definition we gave you earlier, where you're listing. So what is an IPO? It's an initial public offering, or the listing of your sales the listing of your shares for sale to the public. So private companies typically have a small shareholder base. If they have investors, those investors have entered in through private placements or the purchase of shares. This is offering those shares to be available not only for sale, but to be traded on electronic platforms. So it's the next evolution, if you will, of having additional owners and buyers and sellers taking a piece, of course, of interest in ownership of your company. And those are typically institutional investors. They are relying on the governance and the structure and the platform that has been created for an efficient trading market of the stock that is available once it's sold onto the public offering.
Okay, well, who are the companies that are a candidate for going public?
Well, in today's day and age, of course, you have, lots of excitement around AI, around, tech, around medical, around life science. I'm quite interested, of course, in tech-enabled businesses that are strong operating companies with cash flow and profitability that are actually enhancing their profitability and their growth with tech. But the markets are looking for companies that are scalable, that have a proven product to market fit, and are meeting all of the criteria for a platform-based IPO. So if you look at just about every industry sector, I think there's a public company listed within each one and every one of those. There are, of course, more areas that are kind of the high flyers. I was joking with somebody today. We were visiting with their company. It's an industrial company, and they were calling it boring. And I was joking and saying, you know, cash flow is not boring. Cash flow is sexy to every investor. So there are buyers for companies in all different sizes and stages. And what most entrepreneurs don't realize is that you can access those markets. And it's the same for investors. So there are two books that I've written. One is geared for the entrepreneur. The other is geared for the investors, because generally speaking, IPOs are greatly misunderstood. And I've been fortunate to be on the inside of those conversations as a banker, as an entrepreneur, as an advisor, and as an investor. And I wanted to share that knowledge with people as they look to understand how to enter into investing and or taking their companies public.
Absolutely. Are there any disadvantages for IPO?
Like everything, there's pros and cons, right?
Of course.
So, you know, obviously one of the biggest ones is that there's a significant cost. And next to the cost is the time and the energy and the resources that go into running the public side of your business. So I like to say it's like operating two companies. You have your operations, your day-to-day business, and then you have the business of being public. So there's a time, energy, and resource requirement to that. And there's volatility. So inside of being a public company, you're subject to the market swings, to the volatility, to making sure that you satisfy all the reporting, the regulatory, and the requirements of shareholders that you're now accountable to. So these are huge shifts, right, from running and managing a private company to working with inside of a public company that is seen as some of those are advantages that come along with challenges that could be seen as, you know, a disadvantage in the sense of all of the work, systems, and processes that have to go on that you wouldn't need if you weren't a public company.
Right, that's right. But I'm sure you guide companies through that. So if you have somebody that just went through an IPO, they can be coached by you on how to get all the regulatory and all the actions that they have to be doing, how to get them in.
There's several parts of my business. That's one of them where we prep the companies, we educate them long before you can begin the execution. That's typically done in anywhere between 18 to 24 months before the company would do their IPO. And then I really am passionate and have a purpose around working with CEOs directly who have their goal and their visibility on one day ringing the bell at the Nasdaq or the New York Stock Exchange. And, you know, these all require, like you said, a significant amount of learning, of understanding. You have to set up repeatable processes, right? You've got checklists, you've got to build your models, you've got to build governance, you've got to build allocation systems. There's a lot inside of what a company has to do. And one of those biggest changes for an entrepreneur is governance. So when you're the CEO or the founder or the president of your own company, you're used to making your own decisions. Now, all of a sudden, you have a board to be accountable, and that board has their own criteria and governance. So you go from being what would be an entrepreneurial, founder-driven type of a mindset to one now where you've got to be able to shift to a process and a system that represents clear governance. And there are disclosure protocols, right? There are financial controls, you know, and all of these things send a message, which is that you're investor ready, you're public market ready. So both the investors are looking for that, as well as the companies to have an efficient kind of execution of the ability to participate in what is, I think, one of the most rewarding ways to build your business.
Absolutely. It sounds that way for sure. So, Peter, we touched upon systems and processes. From your viewpoint, why are systems and processes important? We're talking right now, let's say we're talking to entrepreneurs that are not quite ready for IPOs, or maybe they are and they now listen to our episode and they're going to contact you and they go, you know what, I want to be ready. Why systems and processes are so important for any company in order for them to scale and get to a point where they can actually exit?
Yeah, I think no matter what level you're at, to me, I can give you really the bottom line on the question is that I believe systems equate to confidence. And if your team, right, your clients, your stakeholders, your investors, the more confident they are in how you're building and executing on your business with those systems and processes and controls in place, the more likely they are to want to continue to do business with you.
That is very true, because that leads then to consistency, risk mitigation, ability to exit, retention of staff. It also builds the confidence, internal and external. It builds the confidence with your own staff, and it builds the confidence with your clients or customers. So I like that confidence. Systems create confidence. I like that aspect of it, because that's really what it does. Excellent. Well, if our listeners would like to hear more, learn more about what you do, get you to help them, how can they reach you?
Easiest thing is to just connect with me on LinkedIn. I'm very active. I put out a lot of knowledge, a lot of information. I work a lot with CEOs and entrepreneurs as part of what I do to make sure that they have an understanding of what's possible and what they would like to do to fulfill upon their vision. So connect with me on LinkedIn. I have a newsletter there. You can get my book. It's available on Amazon, both of them. And you can send me a message if you'd like to connect, and we'd be happy to talk further.
Excellent. Well, Peter, thank you so much for being a guest on this podcast. It's been a pleasure having you and talk about this important subject that a lot of entrepreneurs have to be aware of, that it's a possibility and an option for them in terms of one of their exits or one of their strategies for the business.
Thanks for having me, and I hope it brings some value to the listeners.
Thanks for listening to the System Simplified podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.